what a wonderful session it has been, right? So I'm from the technology side, provide technology to BFSI sector. And with our technology, we try to make a difference to how a bank or an NBFC operates, how they serve their customers, and how they improve their operational efficiency. And this session has been really useful for me because I learned so much about the business side of things. I learned so much about how much NBFCs is contributing to the economy, to the country as a whole. I can see the passion, when some of the speakers spoke in one of the panel discussions when they talked about how much NBFCs are doing, and in return, how much support they are getting from, say, the banking sector or from the regulators. It's really touching, right? So first of all, a big round of applause for the entire sector, for all the NBFCs. I really appreciate the work that all the NBFCs are doing. Now, I'm Murali, and I'm the co-founder and CEO of Vaultedge. We are a technology provider for BFSI companies, and using our software, we help you be more responsive to your customers. And in fact, in a nutshell, I can tell you that we help you process your loan applications in minutes or on real-time basis, as opposed to several days or weeks that it normally takes. But my presentation is more about what is happening in the industry. So let's first actually talk about, why does an SME borrow from an NBFC at say 17 to 20% instead of a bank at say 12 to 15%, right? So I'm taking a particular part of NBFC. I'm not talking about the whole NBFCs, like let's say a gold loan or a housing loan kind of thing. I'm more talking about SME loans, things like working capital finance, equipment finance, etc., right? So it ultimately boils down to a few things, right? So number one, the reach and the risk appetite of NBFCs, right? A lot of customers, they can't actually get a loan from the regular banks, right? So they go to a SBI, they go to a HDFC bank, chance that they may not even get a loan, right? So whereas NBFCs have developed that expertise, they have actually built that risk appetite as well as the models to assess that risk to be able to give loan to such customers as well, right? And then they are there in tier 3, tier 4 customers, and they have feet on street to be able to serve those customers, right? So that's number one. The second is the convenience, okay? So today if I apply for a loan to a bank, I have to run after the bank, I have to go there, submit my applications and all that. Whereas when it comes to an NBFC, the agent is actually visiting me, right? So as a business owner, I really don't have time to go after a bank. So in case of an NBFC, the agent visits me, the agent collects all my applications, the agent keeps me posted, and even collections, I know, one of my friend has a business back in Andhra where the collection agent, he actually comes, he opens, the drawer, the tiller, and then he takes money, his kind of, EMI or the weekly payment, and he goes away, right? That level of trust, right? So the convenience is a huge factor. And of course, the speed with which you respond, right? So banks may take 1 to 3 weeks, whereas NBFCs take a couple of days to maybe 1.5 to 2 weeks in terms of loan application processing, right? So these are, I think these are some of the critical factors why an SME comes to you for a loan instead of actually going to a bank and saving that 4 or 5% on that loan application. So it's very, very important for you as an NBFC company to kind of maintain this edge, to retain this edge, and in fact to improve upon it. But then there is but then there's a new beast in town, right? So there are these fintech lending companies that are coming into space, right? So we might think that it is still very early to say anything about it. It's not really about, it's not here in India, etc. But let us look at what is happening overall in this space, right? So these are new age lending companies that are using technology, that are using data, that are using multiple sources and advanced algorithms to decide on their loan applications, okay? So recently I was in the US, I was in the Bay Area for about 30 days meeting different banks, different credit unions over there, right, to understand the sector, how the sector is operating over there vis-a-vis in India, right. I visited the office of Citibank, I visited the office of JP Morgan Chase, Union Bank, multiple credit unions, etc., right. All these companies have prime real estate in downtown San Francisco, multiple offices just in downtown San Francisco, but when I went there, the offices are mostly empty, right? So real prime real estate, huge money sunk, but no customers over there really, right? So think about the money that is going in terms of managing them, without really giving much, right? Then I actually went to visit, or rather tried to visit a couple of other companies, right? So I tried to visit On Deck. I tried to visit another company called Cabbage. Now these are digital lending companies in the US, right? And surprise, surprise, they don't have a single bank, single branch over there for me to visit, right? So with much difficulty, I found an office of Cabbage. I tried to go there. It's actually a development office, right? It's actually a software development office, not really a branch operations, right? So now you have these companies who are able to run the entire lending operations without a single branch, and in a lot of cases without even feet on the street. Okay. Now think about, if the same thing can happen in India, right? And it is actually already happening. So if you look at China, in China, Alibaba, they have a financial arm, Ant Financial, which is a $60 billion market cap company, which provides loans to their sellers, both on their B2B and B2C platform, based on the sales that happen on their platform, as well as multiple other data points. Okay. So now you have a company over there which is now next only to the topmost bank in China in terms of number of loans disbursed for SMEs. Okay. Amazon is actually doing the same thing for businesses on their platform. Right? Flipkart also is talking about giving loans for businesses on their platform. So if you look at it, there is a segment who are sellers, traders, e-commerce companies who are selling on e-commerce platform who already have this option, right? Even in India. Now you might think that, hey, that actually depends on the fact that these platforms control the data, right? So they have the data, they own the data, and maybe that's why they're able to do it. But that's not really the case. You don't need to own the data for you to be able to use these models and be able to do this kind of move into a paperless instant approvals kind of thing. For example, if you take the companies that I mentioned in the US, which is On Deck, Cabbage, they don't own any of this data, right? They don't run a huge e-commerce platform like an Amazon or a Flipkart or a Alibaba, right? They still are able to become a lender and become, in fact, so strong that now traditional banks are trying to tie up with them and understand how they are doing business. Okay? So even if you don't own the data, today you can actually work with companies who understand technology to leverage the data that is available and be able to do the same thing on your side. Okay? And ultimately, remember, this data belongs to the customers, belongs to the SME and not the platform, not the e-commerce company. So there are always ways to get the data and plug into their simple things like their CRM systems, their sales systems, even their emails, to pull the data and make your credit decisions based on that. Okay? So these companies are actually using these advanced algorithms. They are moving completely into paperless transactions, and they are actually able to give instant approvals for their SME applicants. Okay? Now think about, where do you stand on those things that are your differentiators, where you thought your speed, your convenience is your trump card. Now it's not just these new age lending companies. Even traditional banks are fighting back. So think about the recent announcement that Prime Minister Modi made about loan approvals, SME loans in 59 minutes from public sector banks. So here is a portal that is promising an SME a loan approval within 59 minutes, right? And you know that once an SME has a in principle loan approval, then his tendency of shopping around comes down drastically. Okay? So the longer you take for the loan approval, the longer time he's in the market actively actually looking for options, actively looking for a loan. So there is a higher chance that you lose him as your customer, particularly if he's a good customer with reasonably good rating. Then the chances are he would have, by the 4 or 5 days you take, he probably would have found another option, right? So it's very, very important that you also need to have that kind of response time. So the traditional banks, of course, they invest heavily in technology, and they also are tying up with these financial technology companies, right? So I know that there are a couple of Indian banks who actually are working with on deck in terms of using that technology. I know a couple of banks who not only they're actually using digital in their operations, they are setting up completely separate digital lending business units, right? Where the idea is this operates completely independently, and they only use completely touchless banking, right? So by that definition, they may be excluding a large number of potential customers, but that's fine for them because their other business will cater to that. But when it comes to this business unit, they're actually doing instantly, doing it paperless completely, right? On a real-time basis, using multiple data points, etc. Right? So they are doing that already. So from both sides, right? So now you have these new lending companies that are coming in and going to compete with you, and traditional banks also are becoming aggressive and using these technologies. They are again cutting into your differentiators of quick response time and other things. So what can you do, right? What can NBFCs do, right? So I think there are multiple things where NBFCs, even with smaller budgets, even with a smaller size, can adopt these technologies, right? So number one, look for lightweight digital solutions, right? So we talked about the cloud solutions, right? So that's a very good way for you to start, right? So there are multiple areas where you can quickly start, a CRM system, a loan origination system, etc., where you can quickly start. That gives you a huge efficiency, right? Think about digital lending. Today there is technology that's already available in terms of going, making it completely, real time and completely paperless when it at least comes to credit, in principle approval. Okay? So try to break down the problem into a couple of things where you can actually do one part of it completely paperless, take the customer at least to a loan approval point, and then actually in parallel you can actually have the rest process. That way you kind of retain that customer, right, so that he doesn't shop around. Okay? And then there are other things like eNASH, etc. Right? So in my opinion, the whole LOS, CRM, the credit appraisal and continuous appraisal systems are the ones which are prime right now for NBFCs to adopt, right, to stay competitive and retain that edge. Finally, we operate in this space. We help NBFCs stay ahead of the curve using our technology. Very specifically, we do a couple of things. Number one, we help NBFCs process loan applications in real time or in minutes instead of multiple days or weeks. That is number one. Number two, we help you identify those risky applicants early on and eliminate from the workflow so that your compliance burden, your operations burden comes down. And finally, we also enable continuous monitoring of the SME financials so that even after you disburse the loan, you can have a mechanism by which you can identify a customer who can potentially become default, right, and take corrective action. This is a quick workflow of what we enable. Number one, we enable your agents to take all the information, both information that they can type in as well as financial statements. Using this application, they can simply scan the financial statements and take that as an input. Number two, we have integrations to income tax and GST portals. And using customers' consent, we download SMEs financials so that you have authenticated data, you have rich data, and you have the most detailed data, real-time data, to use for your credit appraisal. Number three, wherever that is not available, wherever you don't have customers' consent, we have an OCR and machine learning solution which processes scanned financial statements, understands what is important from it, automatically picks the data and puts it into a standard format. Right? And wherever there is an issue in terms of the data accuracy, the system automatically detects that problem and sends it for a manual curation. Right? This is about correcting that data. Now that can be done on your side by your underwriting team, or it can be done on our side as an outsourced service. Okay? And finally, we help you define your own credit model in our system. So it's the same data, but you look at it differently versus a different NBFC. Right? So you can define your credit model in our system using which the data is processed, and the system tells you the loan eligibility, whether go, no go, and how much loan, what rate, etc. Right? And all of this happens in minutes. Right? And on an ongoing basis, you can actually take additional financial statements and keep updated about the default risk or the default probability. Right? That's how we help NBFCs stay competitive, be efficient, and make sure that you retain that edge that you were originally supposed to have. Okay. With that, I will thank once again all of you for this opportunity. Thank you.